In.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, a safe day. Let's make it a great night, folks. Let's make it a great week. Accept others the way they are. You cannot change other people. To try to change them to fit what you want is like trying to change a dog into a cat or a cat into a horse. They are what they are, and you are what you are. Market-wise, let's take a look at it out here. We had the Dow Industrials finish up 410. NASDAQ was up 107. S&P's up 34. 1.7% gain in the Dow, 1.5 in the S&Ps, 1.5 in the NASDAQ. We're going to take a look at the spread out here today. We had a nice spread in these indices, folks. The Dow got up to a price point of 24,765. Bottom line, still up 410, but gave back 165 points from its high. We're going to take a look at the NASDAQ composite. Also, good numbers, up 107 points, closing out at 69.81. That being said, we were 43 points higher. We were at 7,023. Volume-wise out here, anemic in a big way. Inside the NYSE, this had better gone up somewhat. Yeah, it went up somewhat from the close. So they put 300 million into the close. Right now we did a 1 billion versus 1.3 billion. Inside the NYSE, what we did out here, inside the NASDAQ composite, we did 2.2 billion versus 3.1. That is the makings, folks, of a counter trend bounce once again. If we go take a look at the SPY, what you're going to see inside the SPY out here, traded up to a high out here of 267. You're at 265. You've done 133 million. You're going into like 355. Now, there's no reason that you can't, get a bounce in the SPY up to like 267.58, which is the low of the last bounce that we had. 268.17 is the beginning of the downdraft that happened on Thursday. Bottom line, though, you're going up here with anemic volume, and this is quite a setup. If we take a look at this and we do this on a weekly, what you're going to see, it sticks out like a sore thumb. And on the weekly basis, folks, the bottom line is that what you have is this. You have a technical damage that is pretty intense. And the damage that's out here basically says that we can come back to the November of 2016 levels. That's going to be one big number if, in fact, that's what we do. If we go take a look at the three Qs, we take a look at the three Qs, you put those on a weekly basis, same type of setup. The destruction that is out here is actually more intense inside the Qs. Maybe it's the same number. Yeah, it's the same. It is the same number, I guess. Well, so. No, in the Qs, it's actually to the July of 2016. Now, that being said, now watch this, though. This is where this gets really wild. Is that July 16? Yeah, look at this. Now, that being said, if you want to see the type of retracement that you have out of the whole move, that's nothing. That is, this would be pretty intense. So the July level that I'm talking about is only a 0.382 retracement from the lows that were generated in 2008 right up to where we are. Because you got to remember something, that is one monster move. And this is where, when you just look at the percentage retracements after you have not had a pullback in so long, percentage-wise, it can be the same percentage, but yet monster numbers. And then on top of that, what you end up having, unfortunately, is people leverage themselves on the way up. Gold's in good shape. Bottom line out here is that if we go take a look at the gold contract, what we did, we caught a bid. The real thing that's going to be intriguing inside the gold market is this. So gold out here today did 202,000 contracts. We up 840 right now. You made 1330 or 1324. Gold had already come back down, tested the December 29th as well as the January 2nd breakout area, had lighter volume on the test, goes topside, decent volume. Now, what it looks to me, and I talked a little bit about this in the first hour, is that when you actually take a look at the gold contract, it really held pretty well for the type of downdraft we had. Because you got to remember something. Sorry about that. I got to get this thing straight. That equity-wise, when you come down that fast, they throw everything out of the water. Everything. What I expect we're going to see is on the next pullback, you are going to still get pressure inside the gold equities, inside the silver equities. That being said, it's going to be less pressure each and every downdraft. And when all said and done, bottom line, metals, commodities in general want higher price. And where that's going is all about the dollar. The dollar is in a much larger ABC structure on the way down. Bottom line, we'll see what type of firepower that can actually put inside the commodities. They had it today. Wheat was up 3.3%. Hogs are up 2.4%. Beans are up 1.9%. Let's go over to the copper market. Copper got killed last week. It looks like copper's in a consolidation. Yeah, so copper's gone from 332 in December. We hit a low last week of 302. It did 91,000 contracts today. Yeah, this is not done going down either. This went up with light volume. 91,000 versus 189 the way down. Copper wants to run down to this 294 level. So copper's in a range. The bottom of the range is 294. The top is at 332. What we do have is that the agriculturals, they caught a nice bid. Let's go to cocoa. Cocoa's having a hard time. Cocoa is down 2.5% today. I see. That's not that bad either. Okay, so that had just had a good bounce. It's on light volume. Okay, that's pretty cool. Yeah, this is in a range too. Cocoa looks like you get 1945 that'll hold the ton, and right now we're at 2007. You stay right there, folks. We'll be coming back with some numbers for you. Dow Industrials finished up 410, NASDAQ up 107, S&P's up 36. We'll come right back.